This week, we're expecting a lot of volatility, with one of the biggest events occurring on Wednesday, where we have the Federal Reserve's decision on interest rates. You can see right here that we are expecting, or at least the market is expecting, a 5% rate set by the Federal Reserve. We are currently at 4.75. They're expecting 25 basis points to hit the market and cause it to tick up to 5%. Now, this is a relatively high interest rate. Now, the point of this is to, of course, squash the inflation problem, but at the same time, this is actually less than it was expected to do a month, 2 months ago. People were expecting 5.25, but it's actually come down in expectation due to a lot of the fears around central banks collapsing and that sort of thing. We had, for example, Credit Suisse, which absolutely tanked. Look at this, you guys. This is a major bank that just absolutely crumbled. Now, you've also got so many other banks doing this right now. Here is FRC, First Republic Bank, collapsing on this, and SVB, of course, one of the big ones that everyone was talking about. Which, is just absolutely completely gone, right? Went under. And so you have all these problems going on. And so there is an argument here for the Federal Reserve to not raise rates as fast, or perhaps even pause after this rate hike that we see happen on Wednesday. Now, I want to go through all that stuff with you guys here so that as forex traders, as active traders, we can get an idea of whether or not the dollar right now is a buy. And I'll give you guys my case for this. We are currently looking at the dollar index on a chart. And you can see we've had this really nice run up recently that has pretty much given back almost half of the gains. In fact, if we draw a Fibonacci retracement, we can see from low to high, we are sitting right at the 50% retracement zone of this dollar move. The question is the dollar a buy here after this recent sell-off? Well, you might say, well, Nick, there's banks going under. The Federal Reserve is going to have to print money and not raise rates nearly as much because they threaten more economic hardship on the banks. But you have to remember that when we're looking and talking about the Federal Reserve, they have a really big sort of focus, and that is the inflation number. Inflation here in the United States, as in many other places, is very high. And when we isolate inflation here on this chart just to the US, you can see that we are in the decline. The last thing the Federal Reserve wants right now, the absolute primary thing that they do not want to happen, is for this inflation number to start going up again. If that number starts to go up due to printing money, which again they need to do to cover banks going under and such, it's going to, of course, cause inflation to spike again, which is a serious problem. The Federal Reserve, again, their target is 2%. We are well above that 2%, and the expectation is that again, they'll raise rates to continue to combat this. So 25 basis points, I think, is probably a reasonable expectation for the Wednesday report. We'll see how that plays out. But in my personal opinion, the dollar is a bit oversold. Now, I don't necessarily think that the dollar is like ultra hawkish, bullish to the moon kind of thing right now. But I think that there might be room for some dollar crosses to catch a little bit of a bounce. And I'll show you some of those right now. For example, gold is flying high and hit the 2,000 mark. And on stream today, I said, hey, I think that we're probably going to see a very healthy and needed pullback on gold. I think we probably head back to 1950. We'll see if I'm right about that. But again, I would expect that price continues to drop here, clears after hitting this 2,000 mark again, probably due for a retracement. Especially ahead of a Federal Reserve meeting. It's very likely that the market may want to just sort of cool the jets, calm down on this crazy up move. But I'll show you guys a chart that I like personally. I like Euro USD on the short side. We're currently hitting a level of resistance here. So here's a daily chart view. You can see we had a beautiful upward trajectory, kind of fell apart here though. And I think that the downtrend is still in play. Now, the last thing I'll say about this is that if the market rallies past these highs, then I'll take all of that back and I'll say, yeah, never mind. But again, we'll see if that one can hold. Again, where we currently sit, I think we're at a pretty key level of resistance where sellers should be able to try and poke this thing back down. Now, the euro, like I said, has its own problems. Banks going under, that sort of thing is a scary thing for the European area. And so I wouldn't say that I'm overly confident in betting on the euro, despite the dollar being a bit weak right now. So my opinion is, like I said, favoring the dollar, and I'll show you that. I'll back that up with a little bit more analysis here. If I pull up the major currency pairs and I look look at the Euro USD, we can take a look at this one and see we get currently on the Edge Finder a -5 buy rating. And much of the score that we're getting here is actually in the economic figures department. So if I take a look at this in GDP, inflation, and unemployment and interest rates, all four major categories, we favor the US dollar. Inflation is under control, more so than in Europe. Unemployment is more reasonable in the US. GDP growth is higher in the US. These things point me towards being bullish the dollar on a rally like what we're seeing right now. So we'll see if that can set up for us. That's a trade that I'm personally interested in myself right now. And like I said, I think that with that gold potentially coming off 2000, the euro trade might benefit a little bit about that. We'll take a look at the pound USD here as well. Pound, a little bit more impressive of a rally. You can see price was able to break through a key level of resistance. Now, I think that if the dollar does strengthen a bit, you may see the pound USD come down and retest areas like this, but I wouldn't be surprised if the pound makes its way back up to the previous highs in the coming weeks. Like I said, this is not one that I'm interested in shorting unless we see some sort of failure, lower lows, lower highs, that sort of thing to come back in this market. But for now, this market looks really strong, and I don't really have any interest in buying or selling this. Let's talk about dollar yen. I was wrong on dollar yen twice, two different times. I tried to get long on dollar yen off of this crazy run to the upside. I was looking to get long at the 50% retracement. I tried again at the 61.8, and unfortunately was too early on the trade and got stopped out. One for about break even, and the other for a loss. So no longer interested in dollar yen at the time being. We'll see if this thing does decide to start putting in some proof in the pudding kind of thing. If we start putting in higher lows, higher highs, perhaps I'll go back to looking to long dollar yen. I'll talk about another dollar cross that I'm interested. You got dollar CAD, and dollar CAD on the Edge Finder is a strong buy as well. It tagged a level of support here, and you can see this one very, very blue. Lots of blue on this one as it shows a big bullish signal. What I want to point out with this is that when we look at the dollar CAD on the daily chart, you're coming back into support at a major area here. And as price retests, I think we could see some form of a bounce. And again, I especially favor the dollar over the Canadian dollar, as the Canadian dollar has been really, really shorted by institutional traders. I'll show you guys that data now. So if we go to the Smart Money Tracker, this gives us an inside look at what big money is buying and selling. And so when we look at this, we can see the COT data has the Canadian dollar very short by institutional money betting against the Canadian dollar and very much long favoring the US dollar. So we piece these things together to build more full insights on our trades. If you guys don't have access to the Edge Finder, by the way, you can get access to it for a discounted rate using the code YTVIP. Down below in the description, you'll find details on that. Or if you'd like to try out the software for yourself, there's also a link in the chat, link in the description down below. We have a live chat support ready and able to help you if you have any questions about any of our products, services, or just have a question for fun. Check it out. Link will be down below in the description. Now, another thing I wanted to look at is retail sentiment, also available. We can take a look at all the different major and minor currency pairs. And so when we look at this, I wanted to take a look at maybe some of the indices and commodities here. We'll take off the major pairs for a second. And you can see that right now, oil, very long by retail traders. UK 100, very long by retail traders. JP 225, very long by retail traders. And a couple mixed ones here, NAS and S&P, US 30 also mixed. But then you get like German 30, very short bias, and a big notable one is gold with a 79% ratio where basically retail traders are shorting the gold market as it rallies, which is a bit of a red flag if you are short yourself, because again, if gold is, rallying really strong and all the retail traders are shorting it, I do think it is a bit overextended, but I'd be careful with that trade trying to bet too much on the collapse, as that is sort of what the retail trader on average is doing right now. Something to pay attention to in your own trading. I hope this video has been helpful to you. If you're enjoying the content, make sure to hit the thumbs up button, subscribe, and we'll see you back tomorrow. Thanks. Before you go, make sure to check out our free Discord channel linked down below in the description. And if you want to try out some of our products, our software tools here at A1 Trading, we have free versions available also down below in the description. Check them out for yourself down below. Also, if you enjoy our content here, we work really hard behind the scenes to bring this content to you each and every day. And if you enjoy our content, it would mean a lot to us if you hit the thumbs up button before you head out. Thanks for watching.